Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and you can connect live with us through a WhatsApp number that will be flashing on the top of your screen. And onto the Buy Now, Sell Now lens, we're going to be focusing on the IT space. But before that, let's have a look at what the markets are up to. So Cheryl, the markets continue to trade weak, but the good point is that they are bouncing back from the key support levels.
Absolutely. A very good morning to you, Shrishti. And if you look at the benchmark indices, yes, Nifty is drifted below the 19,600 mark on an intraday basis. Right now, trying to actually claw back from those low levels. Remember that we got a very, very weak handover coming in from the US markets, and that kind of trickled down to the Asian markets as well. You had the SGX or other GIFT Nifty indicating a Nifty implied open with a downtick, and that's exactly how the trading has transpired. If you look at Nifty Bank underperforming the benchmark indices once again, 6% downtick coming in for the Nifty Bank. Let's take a look at what the broader markets are doing. That's your mid cap index as well as the small cap index, and both of them I believe are holding in the positive territory, outperforming the benchmarks and most of the sectoral indices. If you look at the advanced decline ratio, a tad bit tilted towards the decliners as of now, but yes, earlier hours of trading sessions, so a lot more hours left. So let's wait and watch and let's see how that kind of shapes up going ahead. Let's take a look at the list of gainers and the losers. Then is the pharma index holding on pretty strong in trade today. You have Cipla as well as Dr. Reddy's among the top gainers on the Nifty, with LTI Mindtree, DV's Laboratories as well as Adani Ports following suit. We're talking about the losing end of the market is Bajaj Finance, that's seeing a downturn of about 1.4% today. You have Tata Steel, ICICI Bank, BPCL, Titan also seeing some sort of pressure. Add to that list, even HDFC Bank is declining in trade today. Sectoral indices then, and sectoral indices front, it is the bank index that's seeing most of the declines coming in, and power and auto also seeing some tad bit of declines. But on the flip side, it's the pharma index seeing strong gains, about 0.9%. Realty index holding on to good gains, as well as PSU Bank index. That's the one that is outperforming the private banks in today's trading session. PSU Bank index in the positive territory. So that's the way how the markets are looking like at this point in time, Shrishti. But definitely, all eyes will definitely be on the on IT index. You have brokerage notes on it. But apart from that, also we will be entering into the earnings season pretty soon.
Well, yes, pretty soon we'll be entering the earnings season, and from the global markets, Indian stocks will be reacting to the Accenture numbers. So Accenture numbers is something that we'll be watching out for. But for today, coming to the brokerage note, Morgan Stanley has come out with a note on the Indian IT space where they have revised their calls on most of the IT stocks. Anisha is here with all the details. So let's go across to her. Take it away, Anisha.
Well, yes, next couple of weeks we'll be talking a lot about IT sector. Tomorrow itself, of course, Accenture will come out with its earnings, and that's going to set the cue for the coming quarter. But what Morgan Stanley is saying is don't pay attention to the coming quarter, because pretty much we all know it's going to be a weak one. The big question is, what are you penciling in for FY25? And that is why they have a narrative which is turned a bit more positive. They have high target prices all the way around, and it is Cyient which has seen quite a bit of upgrade as well, while Tech has seen a bit of a downgrade given the recent run-up that we have seen in the stock price. Now, what their thesis really is the FY25 earnings. They are expecting that there could be the possibility of a double-digit EPS growth, and that's what they are banking on. They're talking about the fact that the US economy seems to have bottomed out. They're not expecting it to get any worse from here on. In fact, the hyperscalers revenue growth too has bottomed out. There is an expectation of a rebound in the BFSI spend going forward in the calendar year 24. The announcement of large deal wins that we have seen recently also augurs well and gives you the visibility for FY25, and they are expecting that the order bookings will continue to be strong going forward as well. Additionally, they also see some tailwinds as far as margins are concerned in FY25. The attrition rates are falling, the utilization rates are suboptimal right now, and there is room to improve the employee pyramid and operating leverage, and all of this will mean that there's a margin upside as well. Valuations, yes, is very close to the 5 averages, but do remember that there is an under ownership right now, both by the domestic as well as the foreign institutional investors, and the double-digit EPS growth is not completely factored in, so they do see an upside in terms of valuation as well. Now, within large caps, they like HCL Tech the most, followed by LTI, Mindtree and Infosys. They maintain their equal weight stance on TCS and Emphasis because the valuations are a bit punchy there. They've downgraded Tech Mahindra to underweight, as I pointed out, because the strong outperformance is behind, and now if at all there is more risk to the downside rather than the upside. They've upgraded Cyient to an overweight because of the EPS upgrades. Margins have been resilient, and overall the expectations that the market has with respect to revenue growth is quite muted, so there is that room to surprise, and that's why the upgrade coming in on Cyient.
Thank you so much for that, actually, Anisha, for talking about the IT sector, what Morgan Stanley exactly had to say, and saying that from H2 onwards, things will start looking brighter for the IT index. And yes, you also did touch upon the fact that you will also have Accenture that will be releasing their earnings, so all eyes on that one as well. But what should you do with IT? Should you directly ignore the sector, or have the valuations become attractive enough for you to take a look at it and take the plunge just ahead of it entering the Q2 earnings season? Let's put that question across to our experts today. We have Kunal Bothra as well as Shahina Muqaddam joining us on the show. Very good morning to you, Shahina, as well as Kunal. Thank you so much for joining us on ET9. Shahina, let me come first to you then, and let's talk about the IT sector in depth. You had the Morgan Stanley that's come out with their note. They have revised its target for some. They have actually downgraded some of the IT counters as well. But what's your take? Are you also anticipating a turnaround in H2? Do you think a flattish Q2 is already baked into the stock price for all of these IT counters?
Anisha has very nicely summarized, what the market is looking at for the IT sector. So, yeah, the expectation is that, Q2 is not going to be great, but it is going to be the first bottoming out of the sector. And secondly, the stocks have consolidated and valuations have started looking fair now. Another point is that it is an underowned sector. So we have a number of funds that will likely to start chipping into IT. And so I think retail also should start doing that. I'm not saying that you need to go in all 100% as of now, but start looking at the sector. One is that because it has a major, exports, or I would say dollar revenues contribute a chunk, more than about 50% of most companies to their revenues. So over a period of time, maybe next 1 to 2 years, you're likely to see even margins improve with cost stabilizing. Secondly, I think the problem that affected the whole IT sector for the last 1 year, which actually saw their growth, coming down to low single digits for most of the companies, is because most of, say, North America, which contributes a chunk of revenue for the international markets, there what we saw was that companies started hiring locally and started doing in-house investments rather than outsourcing. So the outlook for deals had started to look a bit uncertain. But I think now things are stabilizing and growth should start coming in. Maybe by FY25, a 10% growth is likely, which of course is much higher than what we're likely to see in the current year, and while it is lower than what we saw a couple of years back, it is still good. So I think in terms of investments, these companies offer a good, stable portfolio type of investment. So I would recommend that investors can start looking at investments in some of the quality names, like you have TCS, Infosys, you have some of the small cap companies, like she mentioned, Cyient looks interesting. You have also companies like Birla Soft, which are doing good work in terms of getting new orders. So I think to that extent, you can build a portfolio in IT, build it over the next 1 to 2 years.
Can't completely ignore the sector at this point in time, and retails can actually start looking at this particular sector. But Kunal, coming to you purely on the technicals for today, with a fall in the market, IT sector is still trying to hold up. Given the handover from Nasdaq wasn't that great, what's your take on the IT stock, and specifically two stocks in focus? Firstly, Cyient, which has seen an upgrade and the stock is holding itself in green, as well as Tech M, which has seen a phenomenal run-up, but Morgan Stanley is now downgrading the stock. So what's your take on these counters?
There are two parts to it, I'll say, Srishti, because first, trying to compare this with the movement in Nasdaq may not be a right comparison, at least in the last 6 months, because Nasdaq has rallied up more than 50%. I think from 10,500, the index has crossed or had touched to 15,500, 16,000 levels, and from there it's corrected some 7-8%. as compared to that, I think the IT index has just rallied from 26,000 to 31,000 odd levels for itself, and now it's seeing a mild correction for itself. So yes, the rally has been quite steady for the Nifty IT index, but it's not as strong as compared to the global index. The other way to look at it is September 2022 was actually the point when most of these IT stocks formed a major bottom for themselves, and from there many of the large cap IT names, mid cap IT stocks, they've managed to show very good traction. Many of these stocks have come back to their 50% retracements of the entire fall from 2021 highs. So net, my belief is that the prices are giving a first hand indication that the the negativity for the IT index or the IT stocks is behind us, and I think there could be a very strong case which could be building up that for the next 1 to 3 years you could see many of these IT stocks performing quite well. I would be bullish on the entire pack, large caps as well as mid caps. Talking with the specific to a few names that you mentioned, something which looks attractive. Even the likes of Birla Soft I've been very bullish on right from the time when the stock was at 350 odd levels, and large cap IT names like Tech Mahindra, HCL Tech as well as Infosys are also amongst the top bets from the large cap space.
There you go, an exhaustive list of stocks that Kunal has mentioned from the IT pack, as well as Shahina giving her take on the entire pack. So I hope that kind of solves most of the queries that must have arisen in our viewers' mind on the IT sector. But on that note, we slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking, or rather start taking your queries. So viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now show, where we get you answers for all of your stock related queries. Remember, viewers, you can connect to us on the WhatsApp number that you will see shortly on your screen. Do remember to mention your name, the stock that you're looking to invest in. If you've already invested in the stock, mention the buy price, the quantity, as the time horizon. With that, our experts will be able to help you better. And experts today, we have Kunal Bothra as well as Shahina Mukaddam. And let's continue, or rather, let's start taking your queries then. And the first query that I have is coming in from Parvinder Singh, writing to us from Noida, and he has 150 shares of PFS at a price of 28.5 rupees per share, saying that can hold the stock for the next 4 months. I'm really unsure which stock this is, and the other stock that he is asking about is NCC. He's intending to enter the stock for a period of 8 to 9 months. 8 to 10 months, is it advisable, Kunal?
Well, yeah, I would suggest to hold on to PFS, that's PDC Financial Services. 28.5 approximately is your price. I'm not sure whether you've adjusted the dividend of 1 rupee, which I believe was there, I think, start of this month, 5th or 6th September approximately. So it looks attractive at 30.31. Today, I think the stock has made a fresh high above that 31 mark. So I would suggest to stay put with the stock over the near term. And hopefully if this momentum continues, then the stock may come back towards 34 to 35 mark. That could be a point where you may consider booking out profits. NCC also, the view remains the same. The stock has gone through a phenomenal rally from 60-65 last year. The stock is now almost at 160 plus mark. I think 175 approximately was the high for NCC a couple of weeks back. Again, the stock has corrected more than 10%. So at an attractive territory for current levels. So you can look to maybe add also NCC at current levels, but hold is what I would recommend broadly.
Okay, moving on, and Kunal, once again a query for you. This one is from Tushar from Delhi, and he wants your advice on Ashoka Bitcoin. Wants to know, is this a good time to enter this particular counter with a medium-term outlook?
Well, the stock seems to have done reasonably well from a bottom of 70 just about some 4-5 months back. It's moved up towards 100 plus mark. Interestingly, this zone of 100, I think 100 to 101 has been acting as a good support for Ashoka Bitcoin in the last 1 to 2 months. There have been mild corrections, but the correction seems to have halted at this 100-101 mark for Ashoka Bitcoin. So maybe that could be an entry point, or that could be a stop loss or a support point if you're looking at this as a trade. So I would suggest that you can look to trade the stock, but then as I said, 100-101 could be either an accumulation point if you are looking at it from a long-term play. If you're looking at it as a short-term play, then that could be a stop loss zone for Ashoka Bitcoin.
All right, this one is coming from Satya, and this one is for you, Shahina. He's saying that you had spoken about Varilal and you recommended this on Women's Day, is what he's saying. He's asking that should he sell any of the stocks that he's listed below in order to go ahead and buy Vadilal, and if possible, if you could give an entry and target price for the same. The counters that he's looking to exit is Axis Bank, where he's making 34% profit, IndusInd he's making 25% profit, and ICICI Bank he's already making 20% profit on that holding. So is it advisable to let go of any of these large caps and instead look to buy Vadilal at current price? He's saying he's a long-term patient investor.
Well, I think since he has three stocks in banking, of the three, I would prefer to hold on to IndusInd Bank and ICICI Bank, and maybe he can switch from Axis Bank to Vadilal. Here, I believe there is an opportunity both for M&A as well as improvement in the overall business. Balance sheet remains pretty okay, and the potential is good. Valuations are attractive. So yes, I would switch one of the banks to Vadilal.
Okay, Kunal, the next query is coming in on Kotak Mahindra Bank. This one is from TKS Badri from Bangalore, and he's holding 10 shares of Kotak Bank from a price of 1750. Wants to know what is the outlook for the next 3 to 6 months, and can he add more at current market price, and any short-term targets for the same?
See, it's been almost 2 years, I think if I'm not wrong, 2020 end, where 3 years rather, is where Kotak Mahindra Bank entered into a consolidation. I think 1650, 1700 was the base for the stock, and 2100, 2150 was the resistance for the stock price. Now it's already been 3 years for the stock, approximately in this range for itself. It could just be a matter of time that the stock may break out of this range. Now, I would probably believe that the breakout should happen on the upside for a stock like Kotak Mahindra Bank. But my only concern is that if you have a 3 to 6 month time horizon, I'm not sure whether that in this kind of a time band, the stock could provide a breakout. If you have an extended time frame, which you can probably keep it maybe closer to 1 to 2 years, then I think it makes sense to buy as well as to hold on to Kotak Mahindra Bank at current levels and expect the stock to break past about that 2100 levels and start a strong uptrend.
All right, the next one is coming from Ephraim. He is writing to us on Dubai. Kunal, one more for you. He's a long-term investor is what he's saying, but he wants to buy or add on to L&T Tech. He's already has 20 shares at a price of 3,690 rupees per share. Makes sense to add some more right now?
Yeah, makes sense to add. As I said, mid-cap IT stocks, they should do pretty well over the next 1 to 2 years, starting from the next 1 to 2 years. So I believe if you have that kind of a time frame, L&T Tech, I think L&T Infotech, Mindtree, Coforge, these are few names which can do pretty well for themselves, other than the two names which I mentioned earlier, Birlasoft, etc.
Okay, moving on, and Shahina, the next query is on Pfizer India. This query is from Thami Sharon from Bangalore. I hope that I pronounced his name correctly. And he's holding Pfizer from a price of 5,200 rupees, sitting at a loss of over 25% now. And even today, when all these pharma names are buzzing, Pfizer is trading flat. So any hopes on recovery going ahead? How do you see that?
I would suggest is, it is better to switch from Pfizer to some of the Indian pharma large cap names. You can take your pick, maybe Dr. Reddy's, Cipla, you even have Torrent Pharma. So I think it is better to move from Pfizer to one of these companies as of now.
All right, the next one is coming in from Balaji from Chennai. Bought RVNL at the price of around 78 rupees per share, 100 shares of RVNL. Kunal, should he look to book profits or hold on to this one, or look to average out also right now, or rather add some more in his portfolio for a period of 6 months?
For a period, that's the point. The period of 6 months, if you're asking, then I think it's a good time to book out profits, because after that steep rally for RVNL in the last 1 year, so there have been 3 instances when the stock has rallied more than 100% in the last 1 year, and post that we've actually seen the stock consolidating or correcting in for the remainder, I think 8 or 9 months. So that's the point of concern for a stock like RVNL. It would show that periodic jump, but then the stock would also go through a time-wise correction, which I think it's entered at current level. So I'm expecting that possibly in the next 3 to 6 months, you can expect very similar kind of a price action. 170 plus minus 10-15% for the stock price could be a broad range for that kind of a time frame. But if you're a long-term investor, which means that possibly a time frame of 3 years plus, then I would probably expect much more bigger returns for stocks on the railway space. So all you need to do is look at your time frame and then trade accordingly.
Okay, moving on, and Kunal, once again a query for you. Aptus Value is the counter that Matthew is holding. He purchased the stock at a price of 268 rupees. So sitting at profits right now, and even today the stock is holding a gains of 5.5%. How does this counter look on charts? He's a medium-term investor.
Very recently, the stock seems to have broken out. I think it's a fresh yearly breakout for Aptus Life, breaking past about 292 barrier for itself. But again, I think the volumes today have been good, but the volumes compared in the last 1 or 2 months have been very low on an average for the stock price, which means that the stock may rally further, but then the rally could be restricted because of the lack of strong volumes the stock has seen today as well as over the last couple of weeks in terms of a build up towards this breakout. So you can keep a target, but then ideally as a target we would probably keep 305, 310 as a best case scenario target for Aptus Life if you are looking at it from a short term play.
All right, moving on then. This one is coming from Krish and this one is for you, Shahina. He's saying that he's holding two stocks in his portfolio. One is HUL, which has done exceedingly, or rather, which has not done well for him. And the other one is Godfrey Phillips, which has actually performed well for him. Now he wants to know, does it make sense to actually switch out from HUL and park that money in Godfrey Phillips? Or do you think he should switch out of HUL and look at other stock?
Well, I think HUL is a portfolio stock for the long term, and it has given long periods of underperformance, many times. So I think it is in a consolidation phase of as of now. But yes, the long-term prospects remain good because of the product portfolio and also the growth that is likely to come in from new products. At the same time, what I would say is he should continue holding on to it because even Godfrey Phillips for the Jeffrey Phillips for the shorter term doesn't look that interesting. For the longer term, both look good. So he can continue holding his position separately.
Okay, so that's the advice coming in on both of these FMCG names. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And to answer the same, today we have Shahina as well as Kunal with us to get your queries answered. And Kunal, coming to you for the next query then, and this one is from Ritika from Hyderabad, and she wanted to check on two counters. Firstly is Poonawalla FinCorp as well as Canara Bank. Wants to know, are these counters looking good for a positional bet, and if yes, then at what levels she can enter?
I think both of them are extremely strong stocks. Poonawalla FinCorp, even though the stock is corrected from 450 to 375, 380 where it's trading right now, I still believe that it's a quality name as well as it's come back towards a good support point. So, we ideally look out for 10 to 20% as a retracement entry point. So, for someone who's maybe booked out earlier at higher levels for Poonawalla FinCorp, I think entering at current levels could be very lucrative given the point that the stock or the is looking out from a longer term play. Even for Canara Bank, I am extremely bullish on the prospects of the PSU banking stocks for the next 1 year and more. And I would believe that many of the stocks, the likes of Canara Bank, Bank of Baroda, etc., looks very attractive. So, would suggest a buy on both of them.
All right, let's now head across and hear out what Prime Minister Narendra Modi has to say at the Vibrant Gujarat Global Summit.
भयंकर स्थिति से जूझ रहा था. इसके बाद जो भूकंप आया उसमें हजारों लोगों की मौत हो गई, लाखों लोग इससे प्रभावित हुए, उन्हें अपना घर छोड़ना पड़ा. अकाल और भूकंप के अलावा उसी समय गुजरात में एक और बड़ी घटना हुई. माधवपुरा मर्केंटाइल कोऑपरेटिव बैंक कोलैप्स हो गया. इसकी वजह से 133 और कोऑपरेटिव बैंक में ये तूफान छा गया. पूरे गुजरात के आर्थिक जीवन में हाहाकार मचा हुआ था. एक तरह से गुजरात का फाइनेंशियल सेक्टर संकट में आ गया था. उस समय मैं पहली बार विधायक बना था. मेरे लिए ये भूमिका भी नई थी. शासन चलाने का कोई अनुभव नहीं था, लेकिन चुनौती बहुत बड़ी थी. इस बीच एक और घटना घट गई. गोधरा की हृदय विदारक घटना हुई और उसके बाद की परिस्थितियों में गुजरात हिंसा की आग में जल उठा. ऐसे विकट हाल की शायद किसी ने कल्पना की होगी। मुख्यमंत्री के तौर पर भले उस समय मेरे पास ज्यादा अनुभव नहीं था, लेकिन मेरा गुजरात पर, अपने गुजरात के लोगों पर अटूट भरोसा था। हालांकि जो लोग एजेंडा लेकर चलते हैं वो उस समय भी घटनाओं का अपने तरीके से एनालिसिस करने में जुटे हुए थे। ये कहा गया कि गुजरात से युवा, गुजरात से उद्योग, गुजरात से व्यापारी सब बाहर चले जाएंगे, पलायन कर जाएंगे और गुजरात तो ऐसा बर्बाद होगा, ऐसा बर्बाद होगा कि देश के लिए बहुत बड़ा बोझ बन जाएगा। दुनिया में गुजरात को बदनाम करने की साजिश रची गई, एक निराशा का माहौल खड़ा करने की कोशिश की गई। कहा गया कि गुजरात कभी भी अपने पैरों पर खड़ा नहीं हो पाएगा। उस संकट में भी मैंने संकल्प लिया कि चाहे परिस्थितियां जैसी भी हो, गुजरात को इससे बाहर निकाल के ही रहूंगा। हम गुजरात के पुनर्निर्माण ही नहीं बल्कि उसकी आगे की भी सोच रहे थे और इसका एक प्रमुख माध्यम हमने बनाया।
All right, that was Prime Minister Narendra Modi addressing at the vibrant Gujarat Global Summit. Remember, 20 years have completed of that mega summit, and we will cut across and get you some more highlights in a short while. But let me continue taking queries then, and this one is coming from Subramanian from Bangalore, and he's purchased Borosil at a price of 687 rupees per share, 161 shares, and 1,000 shares of Supreme Petro 2 years ago at a price of 468 rupees per share. Shahina, he's asking what to do with these counters, given the fact that he's already holding on for the last 2 years. Do you think that he can make this a long-term investment, continue for the third year itself, or should he make some switches in this?
No, I think he should continue holding. Maybe in the shorter term, he may see some bit of consolidation, but I think things are looking positive. I think there's some positive news development also for renewables that has come in today. So I think he should continue holding.
Okay, continue holding this one. But Kunal, the next query is from Chandrasekharan from Chennai. And he's holding NIIT Limited, 350 shares at a price of 135 rupees. Wants to know, should he average at this particular level, and going ahead in the next 1 year, any hopes that this counter can touch even 200 rupees?
Yeah, I've been very bullish on NIIT Limited, and I think historically the stock seems to have done reasonably well. If I'm not wrong, I think last week or so the stock had seen a phenomenal uptrend from 80-82 levels. The stock had rallied up to 150. It's now gone into a mild correction, so you can start nibbling or buying at current levels, but I would suggest that you add on dips for the stock price, because in case if the correction extends, the stock may try and come back towards 110, 112 mark. That could be a much better level to buy or average for NIIT Limited.
All right, the next query that I have is coming in from Prerna from Bangalore, and she wants to know about GMR Power and Urban Infra. She already purchased some of the shares at a price of 38.75 rupees per share. Kunal, hold or exit?
I would recommend to hold on to the stock. Now I understand that the stock is low liquid kind of a name, goes into periodic circuits, but then the breakout which had happened for GMR Power and Urban Infra Limited, I think that breakout is close to 30 mark. That's a very strong support. I believe that possibly in this leg of correction, the stock may try to close this gap around the 30 to 32 level. So if you're looking to average, that could be a good zone, 30 to 32 for the stock to average from a short to medium term play.
Okay, Shahina, the next query is coming from Rebecca. She is a CS student and investing as well, and she has 50 stocks of NMDC at a price of 127 rupees as well as DLF. She entered this counter at a price of 437 rupees at a profits in both of these names, but willing to hold this for a long term. So, would you like to share a fundamental view on these?
I think she should continue to holding both the stocks. There is a lot of interest coming in real estate, and DLF is, I think, one of the best picks, one of the best picks in that sector. And NMDC is also starting to do pretty well. I think the prices are pretty stable of materials. So I think she should continue holding both.
This one is for you from a big fan of yours, and that is from Vidya, who's a short-term trader, and she's looking for a fresh entry into SBI card as well as MCX. Wants to know whether it's right time to enter both of these counters right now. For MCX, I believe the answer would be yes, given the fact that it has been on your buy list for the last 2 days.
Well, yes, thank you so much for that. First of all, for MCX, yes, it's a buy. I think at current levels also it looks very attractive. Now, the only point is that the stock would be in news flow for the next couple of weeks. So you might see those periodic bouts of volatility, intraday dips into the stock price. So you have to time it pretty well because you are a trader and you're looking at it as a trading play. I think timing is important. I think 1900 levels for MCX, say broadly plus minus 10-20 rupees could be a good point where you look to start entering into the stock. For SBI cards, I would still avoid the name because, even though the stock looks attractive, it's still, fallen below the 50 and the 200 moving average. That's the point of concern because now we are actually seeing, bearish crossovers happening for SBI cards. Now, you might see the stock getting into a rally, but then, whether the rally will convert itself into a trend, for that we'll need to have a confirmation on the upside. So I would avoid SBI cards as of now. Let the stock show signs of confirmation of a breakout. Maybe 825, 840 could be the first confirmation of a breakout for SBI cards.
Okay, that's the take on SBI cards. But Shaina, would you like to give your take on Jain Irrigation? Padma Sivrao from Bangalore is holding 900 shares from a price of 84 rupees. He's been holding this counter for a long time now. And the good part is, at least on a YTD basis, the stock has doubled. But any hopes that this counter will once again touch that 84 odd rupees? And if not, then any other stock from the agri space that he can go ahead and invest his money?
I would continue to, I would recommend continue to hold Jain Irrigation. While it may see a short period of consolidation, I think that huge restructuring that the company has done is going to start to give results. Also, the investments that, the overall group has made in an international company by consolidating its international business will give long-term dividend. So I think to that extent, while, you have to keep a watch on the stock, but it could be a good performer in the medium to longer term.
All right, the next one is coming from Sridhar, writing to us from Hyderabad, and he wants to know about ITC, whether it's a good time to buy ITC at current price. Shahina, he's saying he's a long-term investor. He's ready to hold on for 3 years plus. What's your take on ITC? Do you think that makes sense to buy right now? Do you think that it'll again go through the consolidatory phase that we had witnessed before the sharp rally that the stock witnessed?
I've been a holder for a very long time. I'm very positive on the business. And what I believe is that while you may see for the next 3 to 4 months consolidation, 6 months, some bit of consolidation, I am very positive on the next 2 to 3 years. I believe there's opportunity still left. The hotel business is still to, demerge and give you its, the benefits of demerger over the next 1.5 years. So I am a buyer at every dip. And I think for a long-term investor, it makes good sense to keep adding at every dip.
Okay, moving on, and Kunal, the next query is on NCL Industries. Shiva from Chennai is holding 570 shares from a price of 230 rupees. Wants to know at this point in time, good time to average this particular counter. He can continue holding it for the next 6 months or more if required, but any targets for the same if you can help him with?
Frankly, I had not tracked the chart for NCL Industries, but then as you were speaking, I was actually looking at the charts. I think it's a very good chart because, from the August lows of the stock of 195 to 240, it's seen an exceptionally strong volume. Now, even though from 195 to 240, the stock had moved up on higher volumes, the correction has also witnessed a steady volume for NCL Industries, which means that the stock is actually seeing an accumulation over here. It's come back towards the 50-day moving average. So this could be a very attractive point for the stock price. I think it's a very good chart. And hopefully if this volume pattern plays out very well, we can expect the stock to break past quite comfortably over the 240, 250 mark, which it had made a couple of weeks back.
All right, so that's the take coming in on NCL. With that, we'll slip into a break on this edition of Buy Now Sell Now. Lots more stocks to discuss on the other side. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your queries, but let's mark also the recovery in the markets. We are actually trying to break into the positive territory. Stellar recovery coming in for the benchmark now, nudging towards or inching towards the day's highest point. 50-point recovery for the Nifty. Let's take this query then. This one's coming from Sagar. It's a long-term investor and he has a fundamental question. It's for you, Shahina. He has Vent India, which he's purchased at around 3,000, and ZF Commercial Systems, which is known as Vapco India, at a price of around 6,200 rupees per share. He's saying that the free float is less and liquidity is a concern, but the performance for both the companies have been good, given the fact that both are MNCs, have had a good market share, customers as well. Now he wants to know, do you think it makes sense for him to continue to stay put with these counters for the longer term, or do you think there are better opportunities, better stocks available that in the auto and space altogether?
Well, it's doing pretty well. ZFC India, while the stock has actually given a very stellar performance, if you see the last 1 odd year, but I think even from here it looks good. While the numbers were flattish in first quarter, I think things should stabilize and improve with raw material prices easing. So you should continue holding. And the first one I don't track.
Right, so continue to hold on to ZF, but Vent India, you don't have a view given the fact that you don't track that particular counter, but both of them have given stellar returns, at least for our viewers. Shrishti?
Yeah, but moving on, let's focus to the banking space then. And Shahina, the next query is from Poonam. She's a long-term investor and at this point in time looking to invest in 3 banking names and wants your advice that which amongst the 3 you like the most. IDFC first, Axis as well as ICICI Bank. Any of the stock that you like at this point in time?
I think IDFC first bank looks good. For the medium to longer term investor, valuations are pretty attractive now, less than 1.5 times. ICICI Bank remains a portfolio stock at 3 times book. It is pretty expensive, but in fact one of the most expensive now. But at the same time, I am an investor and I would continue to hold in the long term portfolio. And she can add one, instead of Axis, one dark horse, something like maybe a Kotak, which has not given any returns till now. But I'm pretty positive on the future, as well as something like an RBL, which again has not given any substantial returns for the very long term investor, but I think from here on things are looking better.
All right, this one's come from Manju, writing to us from Chennai, and Happiest Minds Kunal at a price of around 1,300 rupees per share wants to know whether to hold, sell or average.
Should hold on to the stock as of now. Looks to be that the stock is now trying to form a base at this 880 to 900 mark. This is the second attempt for the stock at this support zone. Today also the stock has bounced from that level, so which means that it's a strong support, so I would suggest to hold on.
Okay, moving on and talking about the banking space then in Kunal, a couple of viewers want your take on HDFC Bank specifically because the leader has been dragging the most and sitting near to that 1500 mark. I've got 2 queries. First is from Ashish and the other one was from Harvinder, and both of them are holding HDFC Bank. But specifically for Ashish, if I may take, he's holding 820 shares from a price of 16-14 rupees. At a loss right now, but both have a long-term view. So what's your outlook and any target for HDFC Bank?
See, I think it's, of course, without any doubt, it's one of the quality names. Now it's one of the highest weighted stock in the Nifty 50. So that could also be a point of, the reason why the stock has been a slight underperformer, given the way the Nifty has also behaved in the last couple of weeks. But I believe that 1500 mark is 1535 we flagged off as a very strong support zone for HDFC Bank. So it's now to start to trade closer to this support level for itself. This could actually be a good point where you may look to start even averaging further if you're a long-term investor. So quality stock going through some short-term concerns for itself, but once that irons out, I believe that the stock should rally up higher significantly. So I would suggest a buy as well as an average.
All right, with that, let's kick start with the rapid fire then. This one is coming from Amit Sood and he has Manali Petro for a while now, actually, Shahina. He wants to know whether he should look to exit and look to invest the money somewhere else because the stock has not been doing anything for him.
Well, it's a small cap stock and I think he should exit.
Okay, Kunal, the next query is from Sushi and wants to know, is this the right time to buy Lemon Tree or Suzlon at this point in time?
Lemon Tree could be a much better bet.
All right, this one is coming in from a viewer who's not given his name. Grindwell Norton, 2,300 rupees is the buy price. Kunal, what to do? Stay put with this one?
Hold on to it, but keep a stop loss closer to 1,925.
Kunal, another one for you. Verghese wants to know amongst the three names, which one he can start buying right now, HUL, SRF and IRCTC.
IRCTC would be the first preferred bet, and then from the two names which you mentioned, SRF could be the other stock.
All right, this next one that I have is coming in from a viewer from Vijayawada, Samba Shiva Rao, and this one he wants to know about CEAT and GNA Axle. Makes sense to look to invest in these counters right now for the long term? Shahina?
Yeah, I think CEAT looks good for the long term. He can continue to buy. And the second one, I didn't hear.
GNA Axles.
GNA Axles also look like a decent bet. He can hold on.
Okay, Shahina, what's your take on Tata Motors? Suresh is having 20% profits in this particular counter. Continue to hold on or book profits?
He should hold on to this.
Okay, this one's come from Venkatesh from Hyderabad. Bought HBL Power. Kunal, 50 shares at price of 148.96. Hold or book profit?
I would recommend a hold.
Okay, Shahina, what's your take on Manapuram? Arvind bought the shares at a price of 150 rupees and today it has bounced back a bit. So, good time to exit or continue to hold on?
No, it's continue to hold on. We should hold.
Okay, this one is coming in from Monish from Bangalore. He's holding SSW at a price of around 240 rupees per share. Kunal, look to stay put or exit?
Steel strip, so that's a stock. Would
Yes.
recommend a hold.
Okay, Kunal, what's your take on Federal Bank? Ramesh wants a short-term prospects on this one. He's holding 5,000 shares for a price of 76 rupees.
Excellent chart. You should continue to hold on to it.
All right, with that, we come to the end of the rapid fire as well as queries. Thank you so much, Shahina, as well as Kunal, for joining us on the show, giving your take on the IT sector as well as resolving viewer queries. And viewers, with that, we come to the end of this edition of Buy Now, Sell Now. In case you've missed this program right now, we will be putting up the link shortly on YouTube, so do watch our program there. But with that, we are totally out of time. So stay tuned. Markets at noon coming up next.